in addition to the Fed breaking housing, is the fact that we've all now created interest rate hostages too. And we've talked about this before, but it's always worth bringing up. Go to a baby boomer and say, hey, I'd like you to trade in your 3% debt, if they even have a mortgage, because over half of them don't have one. And I'd like you to go get debt at 7.1% today. What are they going to say?
No chance.
Not a chance. Now, what they will do is they may keep that as a rental and go buy another one, but there's no chance they're letting go of that. The dialogues that my real estate sales team has had with home sellers over the last 6 months, 9 months, a year, when someone talks about selling their home with a 3% interest rate, it sounds like I'm asking to steal their firstborn child. They are emotionally wounded. They can't let go of it. It's this huge fear of loss, because what's happened, unlike 2008, when the mortgage was a toxic asset because of the arms and no one could afford them. Today, people can afford them, they qualify, and the debt is an asset today, so no one wants to let go of it.
Well, there's a reason. It's not just emotional, it's just logical. If you bought anywhere before, let's just call it 2018, right?
Yeah.
Even when interest rates were going up before they went back down to zero in 2020, the difference in the home price is not only up, but with the interest rates also going up, you're probably doing triple the mortgage payment. So it's a financial no-no. Like,
Bingo.
I can't even afford it. So I know for my personal situation, I've been in my house now 12 years.
Yep.
The average used to be, I don't know what it was historically, but during that historically, 6 years. Anton's holding up 6 fingers. So I didn't come up with that. 6 years. During that crazy time between 2002 and 2007, it probably really shortened.
Yes.
Right? Like maybe 3 to 5 years.
Yep.
And then probably actually stayed pretty short as interest rates went down.
Yep.
So there's a lot of churn. But now we're going to a point, I don't know what it is. I would bet money the average is above 6.
It's way above 6.
And what do you know what it is?
I totally know what it is.
Yeah.
'Cause it's a decade. It's
Yeah.
10 years. It's actually slightly above 10 years right now. So this lock-in effect and this lack of affordability is keeping them stuck there. You also asked, like, when are rates going to go down? Tell me, Anton, I want to know. No one knows. If you know, you can pick winning lotto numbers. But we can make bets, okay? And we can make educated bets. So here's an educated bet. The educated bet is that we will be in the mid to low 6s later this year as the Fed drops rates, because we know they're going to drop them. They've said they're going to drop them. The Fed has said 3 rate cuts. So we know that interest rates will come down anywhere between 0.75 to 1 whole percentage point from where they're at today, because the Fed told you they were going to do it. As they start cutting rates, what we've talked about on previous episodes is that mortgage margin will also collapse. And if that mortgage margin collapses, that could add an additional 1/4 point to a full point to that number. Now, don't go being moon boys and moon girls on me. I still believe low 6s end of 2024. In 2025, I do believe we could get into the 5s. And if we're lucky in 2025, you might maybe, or maybe 26, get into the upper 4s. And I believe long-term, we're going to settle in that 5.5 to 4.5 range.
So already know what I'm already doing mentally and what anybody that has been waiting for interest rates. We're going to wait for 2024 and 2025.